Hi, everyone. We have a lot to go over, so let's go ahead and get it started off with the NASDAQ. It's now very clear. Hindsight always. We've always said this, and any true professional that knows what they're doing will tell you this too. Only in hindsight do you realize that something's accumulation or distribution when you have above average volume and you're going nowhere. But after a rally, whenever you do that rally on no volume like we saw in August, and then all of a sudden as you start to go nowhere, you have it on heavier volume, chances are you're churning, especially when an overbought market. We went from oversold to overbought so fast that this is inevitable almost. Today the Nasdaq broke down 1%, did so on heavier volume, breaking below the recent support lows. This does not throw the signal into a sell signal yet, but we are all but there. All we need now is a close below the 50-day moving average, and this is an all-out sell signal. But the key thing is that a lot of people think that you need to buy every fucking dip. If you really believe that, though, you need to really look at something here. Not only do we have negative divergence in our MACD from back here in June to now, it's now rolling over. So we have an MACD rolling over from overbought conditions, and it's nowhere near oversold. TSV is trying to get there, but really it's just leading the weakness lower. So the NASDAQ does not look good, and the NASDAQ 100 mirrors that by not looking good either in heavy volume, and once again the rollover in those technical indicators. The Russell 2000 is even worse. Now it appears that I have a left shoulder here, a head right here, and now a right shoulder here. And now we're breaking down below that tightening 50 and 200-day moving average. So this is what we need to see. We reverse these losses again immediately on Tuesday. Yay. We're going to probably go ahead and rally. However, if we do not reverse these losses and instead add to these losses below the 50 200-day moving average, and we then see that 50 roll below the 200-day moving average, I'm saying that we could easily see the February, May, August lows a minimum. And why is that? Also because, once again, we are not oversold yet on the TSV, and MACD is nowhere near oversold, and it's also been making lower highs longer term in this compared to the price, which has basically just been moving sideways. So not good, not good. And the same thing can be said for the S&P 500 and Dow Jones Industrial Average and New York Stock Exchange. While we remain under a neutral signal, you can see we're rolling over quite strong on our oscillators, and it does not look good. And that's the case for all of them, including the Dow Jones Industrial Average. So our indexes look extremely, extremely weak. And the confirmation, or the early warning signs, were all over the place, but this could easily be wrong, and you could break out, move higher, and we had all these leading stocks holding up that you can make money. To not take the signals would be an act of treason against my system. So I don't feel bad for taking all these recent long signals. I don't feel bad having to cut my losses. I would have felt bad if I wouldn't have taken those signals and we were up 2% today with a lot of those stocks up even more. Then I'd feel bad. As it is now, I now know the long side is the wrong side, and now I'll take proactive measures. And the JNK and HYG, the high yield corporate bonds, they've been telegraphing problems from a while ago. Another chart that I can't show you on here is the advanced decline line. The advanced decline line of the New York Stock Exchange and the NASDAQ has been weakening while the markets rally to new highs. So not only is high yield indicating that something's wrong, the internals are indicating something's wrong. And if you think that really, since, well, hey, we're looking oversold here on the high yield bonds, remember, we're just now coming off overbought in the indexes. And if you think there was any fear out there today, this little quick shot of the VIX should completely alleviate that idea, as we were only up 6% today, barely above 14. And like I was going to be reminded in this one, I'm going to show you guys this. The VIX, don't forget, this thing can hit 30. So I'm looking at this Charles Hugh post of Two Minds, Charles Hugh Smith at Two Minds blog. Look at the junk bond yields near the record lows again. Look at this divergence. So once again, this is not healthy. This is not normal, and this is extremely insane. But I'm sure everything's just okay up here. So this is why, if you're bullish, I don't recommend being a permabull here. Be a bull once we pull back, maybe, sure. But up here, yeah, it seems a little risky. And then over here also, let's see if we can open this in a new tab. You can see back here, if this ever opens up, Thought I had fast internet. I guess not. Oh, God. Okay, so back here in 99, you can see that we failed to break out here on the high yields, and we broke along this triangle, this wedge, whatever you want to call it. And then we sold off. Same thing in 2007. We broke below the triangle, boom, sold off. Well, we're doing it again. We're breaking below a slow topping, like wedging triangle pattern, and we're breaking down. Is it different this time? Maybe, but I truly doubt it. And like I said, on top of that, we also have this that shows here on even longer term, that MACD thing I was showing you. And now let's go back here and let's look at more oscillators. Look at the stochastics, my slow stochastics. It's still overbought on the NASDAQ. And the Wilders RSI is only now starting to come down to the mid-level range, nowhere near oversold. Whoops. And so now let's look at the Russell 2000 stochastics. It's only now rolling over from overbought. That's not bullish. And as you can see with the Wilders RSI, we're not oversold there either. S&P 500, still overbought there too. Dow Jones Industrial Average, still overbought there too. New York Stock Exchange, still overbought there too, rolling over. So guys, we are nowhere near oversold. We have nowhere near the level of fear that you need to see in a market to be calling bottoms. And the biggest thing on top of that, look at all of these sells. 50% and 100% sell signals. This is like 3/4 of our portfolio right now, and over 50% of our portfolios, my two accounts, are full sells. So basically, in both accounts, I have about a total of 50 long positions spread about in both accounts. I'm following about a total of 53 stocks that I've given as long signals overall. But some of those I obviously weren't able to take because I didn't have account capital. Out of those 53 total holdings, 27 are full sells. So extremely, very, very bad day. And remember, if you own a stock and it's not on this list and it's showing you any kind of loss whatsoever, you need to get out, because I hate to tell you, this is not a sign of a healthy market trading the way that we are. And the other things that we have going against it, if you think the VIX isn't much, okay, so the VIX, there's no fear in the VIX, but it did jump today, so we've got to be near bottom. J&K and HYG, that can't get any lower. Overbought, we'll find support around the 50 level on the stochastics, and the market will rally higher. Well, I would agree with that, maybe if sentiment was lined up, but don't forget, the Investors Intelligence Survey has got bears at the lowest level since 1987 at 13%. The AAII bulls are getting back up to their high level range that you normally see. All of our leaders cracked hard today. Since we're looking at these charts, let's just continue. Look at Tesla. Look at Facebook. Look at my new long Solar City, a big tell. I already knew it was a piece of shit long that I'm taking, but I had to obey that signal. It's the only signal I took. So the fact that it ends like that is not good. And then don't forget quantitative easing. Unless QE4 starts, that comes to an end in October. Zero interest rate policy is coming to an end at some point next year. And then on top of that, the United States dollar has been rallying, and that kind of throws a monkey wrench into FX market carry trades. So all of this is possibly indicative of a market that is not healthy here. So if you're bullish, be bullish at lower levels. I cannot be bullish here. Some small stocks that I was watching, for instance, they broke today. So even in my speculative arena, I don't see it anymore. And you know, just a lot of our leaders, they're just cracking, and it just doesn't look good. ILMN, for instance, you know, these things should not be re-rolling over, and they're rolling over from overbought levels. So it's just too dangerous right now of a tape. Caution is definitely highly recommended. And on that note, since we already have hedges going, it's time to increase again. This will now put me in with over a 10% position SQQQ. But I get another pocket pivot point signal, and it looks like it's a good go for me. I mean, I've got 3 very strong pocket pivot point signals from a very tight price range. I got to go long more SQQQ. And then on top of that, semiconductors cracked, rolled hard today. A pretty big sell-off on big volume. It just doesn't overall look really healthy in there. You can see AMD and XPI looks like it might want to roll over. So what I'm going to do is I'm going to initiate a position in SOX S. I mean, the volume surge also in SOX S. I mean, that's big. So we'll add 2.5% of my account capital into this hedge. 2.5% added back into SQQQ. But overall, the market looks like it wants to pull back, but there's still some long positions I have. I don't want to fully sell off. For instance, BDSI, there's no need to sell it all yet. VDSI, no need to sell it all yet, so I mean, there's still some stocks holding up. WDC, we can have to the 200-day moving average. VIPS, these are all 50% sells, but they didn't quite trigger signals that say run, run, run. If all of these would have, then it'd be bigger issues. Like if PanW closes out that gap, no bueno. So right now, it might be rotation, but it looks bad. The Russell 2000 has re-entered a sell signal, sell condition, which means we operate under that level. And I just recommend being very careful here, everyone. Aloha.